Hi there folks, James here. I want to go through some of the markets that we're busy trading. It's Sunday afternoon, getting ready for the market to open later on. I'm going to start with natural gas because that's been a bit of a hot topic. And if you've been following me closely on X, you'll know that we're now hedged on a natural gas position. But I want to go through this COT report and some of the comments on here, and then we can go and have a look at the charts. So here on barchart.com, the natural gas futures market news and commentary. Now let's read it. Nat gas prices climb as US weather forecasts turn hotter. July NYMEX natural gas, NGN25, on Friday closed up by 0.1%. July natural gas prices on Friday rallied to a one-week high and settled sharply higher as US forecasts turn hotter, potentially boosting nat gas demand from electricity providers to run air conditioning. Forecaster Atmospheric G2 said Friday forecasts had shifted warmer for the south and northwest, with early summer warmth expected over the northern part of the country for July 11 to 15. Lower 48 state dry gas production Friday was 101.6 BCF per day. That's increased according to the BNEF. And the lower 48 state gas demand on Friday was 72.4 BCF per day, according to the same place. And LNG net flows to US LNG export terminals Friday were 13.6 BCF per day, a little bit up, according to the same people. A decline in the US electricity demand is negative for natural gas demand from utility providers. The Edison Electric Institute reported Wednesday that the total US lower 48 output fell by 1.8% year to year. Now let's have a look at what's going on in the contract specifications and see where we are. This is a chart showing the natural gas price compared to the 5 prior July contracts. And zooming in, you can see we're basically spot on, dead on track, with a little increase expected over the next week or two, and we're following track with that according to that as well. Let's have a look at what the positioning is and commitment of traders' positions as of June the 3rd. So quite recent. The commercials, 514 long, 422 short, and swinging slightly to the short side actually, as you can see, adding some 5,000 onto the short side and taking off 19,000 from the long side. Producers, 213 long, 223 short, pretty much the same, very balanced, and the additions both the same as well. And then managed money, 162 long, 214 short, adding about the same to each side as well. So managed money kind of angled short, but roughly quite well balanced as well. Non-commercials, and we'll lump that in with managed money, 226 long, 331 short, so weighted to the short side, adding more to the long side, perhaps hedging like I did after this last move higher late on Friday. And then the swap dealers, the hedgers, 142 long, 40 short, as you would expect, angling against the direction of the market. As the market has moved up, swap dealers have added to the long side, expecting this to reverse at some stage. I see they're already adjusting positions here to the short side. And then other reportables, notably and interestingly, 63 long, the retail traders, basically, you and me and the others, 63 long, 116 short, more weighted to the short side. But look what happened on the last COT report, taking quite a large chunk off the short side and adding a little bit more to the long side. So again, probably hedging and a bit of jitters coming in there. So that's all on the COT report, and you can go and check that out on the barchart.com website. It's free of charge. Go and check that out for yourself. Now, going across to the charts. I'll start with natural gas, and I'm just going to show you this chart for now. We'll have a look at the day chart as well. This is the Henry Hub futures over at Black Bull, my broker, tracking the Henry Hub futures price. That big white candle in the middle of the screen is the gap up with a rollover. It's not a bullish candle, but look at the pattern that we've formed. We've got a downward trend line, quite a long-term one. We'll switch this to the day chart shortly. We've broken out of that, failed back inside, bounced off the order block, and we're above that trend line now, but also forming this ascending triangle, or a bullish breakout triangle, if you want to call it that. It's a bullish pattern, has about a 65 to 70% chance of breaking out through the top. I've been currently short, and you can see all my red short positions here, the red tranches. We did take some profit at the bottom and resold over here. However, that last candle on Friday, well, penultimate candle on Friday, actually retested the top of this triangle, confirming that this market is trying to break out through the top. What could happen when we open up the markets a little bit later on today is we could gap up and just carry on moving up through the triangle, confirm the triangle breakout, or we may break down and actually negate the triangle, and a close beneath this 50-period moving average on the 4-hour, and this flat bottom here would negate the triangle and set us back into the short direction. At that point, because I'm now hedged, I would unhedge my long side of the hedge and add some more shorts. But for now, we're fully hedged. All of these short positions are now hedged by one single long position, equivalent to the size of those ones. I have a fair size position. I've still got more room to add if I want to, but I have a reasonable chunk on this one. I want to show you this pattern on the day chart as well, so let's switch across to the day chart. And you can see how neat and controlled this rising ascending triangle is, and how likely it is we are to break out through this order block at the top. This is a very important resistance level, and the top of this current level is at 3.82. A move above there, a break through this order block, could see natural gas going quite a lot higher, and actually a measured move from this triangle would probably take us all the way back up to about 4.7. Back up to this previous swing high and another potential area to sell. Any sort of rallies up above $4, I'll be looking to sell into, and any dips down to about $3, I'll be looking to buy into. I do think we've now entered a new higher range on natural gas, roughly between $3 and $4, and we're trading very near the top of that range right now. Doesn't mean we won't get sort of fairly dramatic spikes outside that range on occasion. That might be one of those coming up right now. So back to the 4-hour chart, and let's see where we are. So that's where we closed, right at the top on Friday. We did dip back down a little bit at the last sort of minute, but closing pretty much at the top of this triangle. We're above all the moving averages, and above us we've got more resistance that we've got to get through if we're going to keep moving higher. You saw the day chart order blocks. I'm going to slap one Fibonacci study in here from the top down to the bottom and have a look at the Fibonacci levels. As you can see, we're right at the 50% retracement level, kind of the division, the important level in a trend between the bears and the bulls. In most markets, you'll find the 50% retracement level is a key level. Look above us now, we've got an order block, a market structure break here at 4.04, just about $4. It's also the 61.8% Fibonacci retracement level, so it's a pretty key level on this chart. $4 round, just about slightly above there. The next stop is the 78.6% Fibonacci level here at 4.32. And let's go back to the day chart now that I've drawn the Fibonacci study on there and see how that looks. There's the 50% that we're testing right now. There's the 61.8% at $4 round, slightly above. And here's the 78.6% at 4.33, right up the top here, near the top of this next order block. So these are all resistance levels that we're looking to sell into, starting at where we are right now. We may well just fail this one, I don't know. It's a pretty bullish triangle. But above where we are right now, all of these levels that I've pointed out are key and important resistance levels, and also consider that we may have to make a double top at 4.7 or even move slightly higher than that. The key to all of this is price action and chart patterns, and we don't have to worry about trying to predict where it's going to go next. We're just reacting to these chart patterns. And that's the reason I hedged at the top on Friday after confirming that this triangle is now being tested, and a breakout through there could be quite dramatic and quite forceful. And that's all I'm going to say about natural gas, folks, and I think that's used up most of today's video, but I'll quickly run through some of the other things. Not a lot's changed on currencies. We're still long on the euro and the Aussie dollar. They both dipped down a wee bit on Friday, but not much. We're also short on the euro yen, very close to hedging this one. And you can see my little triangle up here in the corner, and that's at 165.33. We almost got there, didn't quite get sort of hedged or stopped out. So we're still short on this one, looking for a move down to 144, all the way down to the bottom where this horizontal line is. I've covered all of this in previous videos last week, so I'll link some of those at the end of this one. Just go and check out my thoughts on all of these if you're interested. We're fully hedged on the Nasdaq and the S&P with the short and the long positions very close to each other. Still short on the German 30, long on IWM, long on Nvidia, long on Tesla, and long on MSTR. If you want to know the rationale behind all of those and how and when we got into them, check out last week's videos as well. So on cryptos and metals, Bitcoin got a big bounce, and we're still long on this one. We managed to get short over there, basically hedging our long position, got out of that at the bottom, at the obvious level, 50-period moving average, and the horizontal level at close to 100. I took profit on my short hedge there and added a new long tranche to Bitcoin, and we're also long on XRP and Ethereum, both moving up quite nicely. We remain short on gold, but I'm fully hedged on this one for now. It is moving down, despite the fact that silver's moving up. So we have a short position from there, a short position from there, and it's fully hedged over there. If we do move down to my long position hedge later tonight or early next week, I'll consider taking that out at break even and leaving my short positions on and adding to those short positions. Overall, I'm looking for a move and a breakdown through this trend line, the 20 and the 50 period moving averages right up here, down to about 3,000, give or take a little bit above, a little bit below, and then potentially even a move down to this next blob and these big order blocks down here at 2,700 to 2,550. So essentially still short on gold, but fully hedged. I will take that hedge off if we get down there at break even and add some more shorts. And at the same time, we've been long on silver. They said on X, you can't be long on silver and short on gold. Well, we have been, and we've been profitable on both. So there you go. So on silver, we're still long, but I took half my profit right at the top on Friday, and we're holding the long position from down here at about $32. I know that folks are expecting silver to turn around now like it always does and normally does, but I think we could get up to $37.50 and maybe even $50. We're also long on copper. That one's coming off a little bit as well, along with gold. So we have a position from over here at about $4.70. We're currently trading at $4.79, and I may consider taking this out at break even if we get there later on today or early next week. Going back to the energies page, I'm still long on URA, long from a long way down below us now. We've taken some profit at the orange arrow. We got in down here at about 22. We're currently trading at 33. One of the greatest trades this last week or two, so I'm pretty happy with that one. And we're also long on UEC. This one came back a bit, but found support I may consider adding a little bit more on here next week, early next week, if we manage to hold and break above the 200 period moving average on UEC. But I'm still holding in my position from down here at $4.68. And then on Brent crude oil, a bit of a bump on Friday, which is good because I'm looking to sell up into Moab, up into this level here at around about $67 to $69. And I've been waiting for that for quite some time. We've been very slow in getting up there, but we're actually quite on track with my red arrow, which I've had drawn in since the middle of February. So we're following this in terms of timing, and the timing of my red arrow, which I drew in by hand, is simply based on the angles that we already have on the chart. So I'm following the rough sort of angles that we've got going here, and actually we're almost sort of kind of spot on. I'm looking for a move up into that blob. We've already got some short positions, but I want to get more up into this higher level, closer to the 200 period moving average, and these order blocks, and of course the big Moab long-term breakout level, which has not been properly retested or revisited from underside just yet. So that's my plan, looking to sell more up closer to Moab. And there's even a chance that if we don't hold here, we could move up to this next swing high at about $71, $71.50, or even the channel top, which would take us up to about $74. This is a long-term channel we've been trading within for quite some time now, and despite those two little spikes out breaking through the bottom of the channel, we've held the channel pretty much since October 2023. So it's a long and important long-term channel. So considering that, we may have to reach the top. We have done every other time so far, but I think now that we've broken down through Moab, this will provide the most important and serious resistance. And for the sake of completion, I'll just finish off these next two pages. We're still long on the dollar rand. We have nothing on the VIX, and we're still long on TLT, and well, that sort of moved down again. And the 10-year yield, after breaking down through that support, holding beneath there, has bounced back up again. So once again, defeated on TLT. Might just get out of that break even again. So here we are on softs and grains, still long on sugar. Sugar just bouncing off that sort of last chance support line below sugar Moab. But there's a little tiny fractional support area down there going back to 2021. We bounced off there on Friday. I still like this for the long side, but we may have to just bump along the bottom for a little bit longer. We're short on cocoa. I have not added more shorts to this one yet. Looking to add more shorts. Same with coffee, although that rejected really sharply off the level that I was aiming for. Didn't quite get there, almost got there, but we rejected from there so sharply and so quickly, I got no opportunity to get back in short. I'm still holding 50% of my shorts here, and I did take profit off at the bottom here, hoping to reload up here. We didn't get the reload. We'll see if we can get that next week. I'm long on corn, long on cotton, nothing on orange juice, long on wheat. That had a nice big bump up, and soybeans. We're not in soybeans. Wheat had a nice big move. And basically, there's a very long-term pattern. Eventually, we should break out of here, falling wedge, and a breakthrough there should see a sharp increase in the price of wheat. And I think we could get up to 700, 750, 760, and maybe even up into the mid 800s. We'll see how we go. Simply because it's such a long-term falling wedge, any moves through the top could be quite explosive and quite dramatic, and give us a good rally on that one too. And that's it on softs and grains. So all eyes will be on the open on natural gas for the natural gas traders. Go and have a look at some of the comments I put up on X. One's a little bit harsh, but go and read it. It may apply to you. And if it does, perhaps it'll help you out as well. And just be careful. This pattern could break out. And if it does, it could be pretty dramatic just looking at this ascending triangle. And the technical target for a breakout from this ascending triangle is all the way back up here near these highs. So be very, very careful if you're holding on to shorts. For now, however, we can just watch our Bitcoin chart, see that we're holding up pretty well. And so far, so good on the weekend. But looking pretty good, pretty firm, pretty strong. Hope you enjoyed that, folks. Have a great trading day. Good luck with the open tonight. See you early next week for the next video. And if you'd like to join the channel, click the button below. If you don't want to join, subscribe and like. That would be good enough by itself. Thank you so much. Take care.
They call me the hedgehog, rolling in the zone, layered like an onion with protection on the throne. I ain't reckless, I'm precise like a sniper with a plan. Every loss gets a hedge, I'm the risk-adjusted man. Got positions like chess, never checkmate fast. While they YOLO into doom, I'm built to outlast. I dance with the market, don't fight, just glide, and I hedge like a bull.